Hi everybody. For those of you following the channel, you've seen over the last few weeks that we spent a lot of time talking about a single thing a day, one secret, one hack, one tip, one trick that will help you move the business towards 10xing the growth, the value, the revenue of the business, so that when you get to a point of thinking about selling it, you can 10x the growth and put yourself in a position where potentially you could exit tax-free as well. So I want to bring together why we're doing this and what that means for you. Why would you care? Well, you'd care because you tend to find that 9 out of 10 companies today, when they come to market, don't sell in the small and medium-sized enterprise space. That's not always the case, but where a business is on the market and it's been there for 12 months or more, it's generally because it's been overpriced. And that's a very, very common thing to see. In fact, in our portfolio of businesses that we were looking at 2.5 years ago, 93 of them that we were really interested in going deeper with, doing more with, and potentially buying, we just couldn't because the cost of buying those businesses was going to be way too high compared to the revenue and the profit that they were generating. So let's talk about how you value a business and things that you can look at from the valuation point of view that will help you improve the value of. So in this video, I want to give you 10 things that you could do that will improve the value of the business. Let's go. But before we do me a favor. If at the end of this video, there's anything in here which is remotely valuable to you, it would help us enormously if you would smash that notification bell, hit like for the algorithm, and subscribe so that we can bring you more hacks and secrets that will help you on your way to increasing the value of your business and exiting tax-free when it's time to sell. So let's start off with how businesses get valued today. Although there's many ways to value a business, in most instances a business is going to be valued at a multiple of its profit. So if you've got a business that's doing 10,000 or 20,000 or 30,000 in profit today, most of the time in the current climate, that business is probably going to be worth ×1 its profit. So if you're making 30,000, it's probably going to be worth 30,000 from an investor point of view. You will get different views on this. A market valuation is different to an investor valuation, and a market valuation might make that business worth 2 or 3 times its profit. So if you're doing 10,000 in profit, you could be worth 30,000. But for this conversation, let's just go 1-to-1 because it's easy maths. Here's one thing that would potentially add value to the business over and above the multiple from profit. So if you've got a property in the business and it's got a really good lease on it and it's in a prominent location, then you may find a buyer that's really interested in not only the business, but the lease of the property that goes with the business and would pay a premium to acquire the business with that lease. If you're a manufacturing-based company, it might be harder to do that because you need the premises to trade from most likely, but so many businesses could be relocated. So if you're a brick and mortar business, the lease of the building that you're in and the length of that lease and the position of the building all add potential significant upside value to the business. Not every time, but sometimes. You've heard me talk about this in some of the short videos that I've done, but subscription-based revenue is a real attractive thing for many buyers as well. So what do I mean by that? Subscription-based income. When you're a business that's pulling in revenue from your clients on a monthly basis, that to an investor represents predictable income, and investors will pay more for businesses that have strong, predictable income because they can look out through this year and next year and rely on that income coming in, can see that income coming through from the subscriber base that you've got. So that is another way in which you could increase the value of your business from 1 times to maybe 2, 3, or 4 times. A good example of this, and a sector that I'm looking at a lot at the moment, is insurance agencies and insurance brokers. Now, you might not immediately think that that's a subscription-based business, but if you've got a client base of people like me that buy insurance policies year in, year out, they tend to be very sticky. Once you've established a relationship with your provider, you tend to stay with them if they're servicing you well. And therefore, you can have some degree of comfort that the premiums each year will get renewed through the same source. That's really attractive. Number 3, brand. One of the key things that we see all over the place with the bigger brands, the luxury brands, or companies like Apple and so on and so forth, is the value of the brand. It brings loyal customers and almost guaranteed repeat customers. And so whatever your business is, if you can build a brand, a reputation in your local area, then when it comes time to sell the business, that brand value will add value to the price point that you can get for the business over and above the EBITDA multiple. So that's 3 things: brand, subscription-based revenue, and property. Number 4 is your team and your people. Now, this is a risk, but it's also something that will increase or make your business more appealing to buy. So if you're running a business where you are the business and everything needs to run through you, it's going to be difficult to sell the business, because if you're not there, there isn't a business, is going to be the argument that an investor will use. So the quicker that you can make yourself completely redundant to the business and the processes within it, and have a team of people in place that are running that business with you as the owner, but they're running the business, the better off you are going to be. Because when you're ready to sell the business, an investor will look at it and see that it doesn't need you to run, and they can complete the transaction. And the other benefit that you've got, if you want to take advantage of it, is that you can walk away from the business so much quicker because you're not integral to the business. Number 5, franchises. McDonald's as a franchise has brilliant systems and processes. And whenever you arrive at a McDonald's, it doesn't matter who's serving it to you, it's the same fabulous experience for you each time, if you like McDonald's, of course. So why I use that example is, in your business, if you invest in systems, processes, and procedures, then you're already positioning yourself to be attractive to a buyer, because they don't have to put those systems and processes and procedures in when they buy the company. It gives them confidence that the company is well run because it's got systems, processes, and procedures in it. So these are things that are operationally really important to do, and that leads me to number 6, which is the people. So along with processes and procedures comes outsourcing. A quick way for you to decide whether you're spending too much money on your staffing is to ask yourself the following question: how many of my people cost $25,000 a year or more? For everyone that's costing you more than $25,000 a year, have a look and see whether the tasks they're performing, the job they're doing for you, might be done by someone else to the same quality and standard, but in a cheaper location, outsourcing that overseas. We've got customers that spend $100,000 a year fully loaded cost on staff in Canada, in the United States, and in the UK. But now they've begun to outsource some of those positions overseas, and they've brought that cost down to $25,000 per person. That's $75,000 per person per year saved. Imagine that just went on the bottom line of the business and was reflected in EBITDA. That, added to the rest of the profit that you've got, catapults the value of your business. Now, I'm not suggesting that you do that. I more often see that with customers, what they're going to do is make those savings in order to pay for marketing programs to grow the business further. That's the way that we normally recommend customers do it. But without a doubt, systems, operations, and procedures, plus having staff of a mix of onshore and offshore, is without a doubt a very efficient way and profitable way to grow the value of your business. Another way for you to grow the value of your business is to acquire other companies. Think about this. A lot of companies that I talk to may have taken 3 years, 4 years, 5 years to get their business to 4 million or 5 million in revenue. And yet, if you buy another company that may be a competitor, or it could give you an opportunity to cross-sell your products into their customer base and their products into yours, growing the revenue of both, buying that kind of company could double the size and profit of your business in an afternoon. It's a very, very fast way for growth. In fact, I know multiple entrepreneurs who have gone out and bought businesses, and a few years ago they had nothing, and now they have businesses that are trading collectively at 50, 60, 70 million in top line revenue a year or more. So combined with marketing and sales and the organic ways to grow and streamline the operational cost base of your business through operating procedures, systems, and outsourcing your staff, this is another way in which you can not only grow your sales because of the cross-sell, but also double the size of your business. Now, just with these 6 or 7 things that we've spoken about so far, you've more than 10x'd the value of your company. Now, a lot of people ask, how do you go and buy a business? Because normally you have to write a big check. That's not always the case. You can often find yourself in a position where you can make the deal attractive for you and the seller and not have to put much money, if any money, down at all. One of the first things we do when we're looking into a business is we ask the question, how are you marketing today? You would be amazed that how many companies have a website and think people will just find them. It doesn't. So when we're looking at a business, one of the biggest skill gaps is digital skills. And if that's an area where we know that digital skills are in short supply, it naturally follows that companies are not maximizing their opportunity for revenue and profitability because they don't know how to take advantage of the digital economy. What do I mean by this? YouTube, Facebook, LinkedIn, Instagram, TikTok, Twitter. I used to be really frightened of using these platforms. And yet recently, what changed for me was thinking about them as a free distribution tool for the messages that we wanted to get out to serve you guys and others in the community that we could never afford to get out in any other way. Once I had that locked in, it gave me the encouragement to push record and do these videos. But videos is just one of a whole bunch of things that could be done. And when we look at companies, we're looking to see what gaps there are and where we could take their best performing print campaigns and turn them into digital campaigns to reach more people and drive more revenue, profit, and value to the business. Lastly, artificial intelligence. We're all hearing about ChatGPT. In fact, in our business, we've become experts with artificial intelligence and how to use it. And so one of the things that's very useful for businesses to look at is to see how AI can help them make more sales or help them save money. We're using it for both. And so you will see from me in other videos on this channel the digital artificial intelligent version of me. I know some of you are thinking that you'd rather have the intelligent artificial version of me than me, but let's get to the point where they're coming out there. But these are in production now. In my business, it allows me to get the message out there so much more effectively and so much more quickly and really cheaply too. Finance. One of the things that I see a lot in businesses is their cash flow coming into the business can often be improved when you look and just continually examine the 13-week cash flow forecast that most businesses have. Always try and push out payments as far as you can and bring revenue forward as much as you can. So what do I mean by that? Because everybody says that's easier said than done, Mark. So when you're going online now and you're looking to sign up to use a software as a service, they'll offer you an annual price and a monthly price. Now, they'll often make the annual price a lot cheaper than the monthly price because they want the money from you up front. I think it's better to go the other way if you can. Try and make your annual price more expensive than your monthly price, because if you're thinking about the end game and the value of your business being worth a lot more, if you can show an investor that you've got a regular, reliable monthly income stream with a high retention rate, then you're better off to do what the market's not doing and encourage your customers to subscribe to you monthly. But you need to change your pricing model to make sure that it fits with your cash flow requirements. And that might mean you elevate your pricing, but then you bring the pricing back down through monthly subscriptions. And in that way, you've got the cash coming in every month. and your valuation model is going to be much more attractive. Just these tips, if implemented, would more than 10x the value of your business. And we've not said anything here about how we help you exit the business tax-free. If any of these tips or tricks have been helpful, please help us by subscribing, hitting the notification bell and liking this video, and follow us. We're across different platforms. There's a link in the description to all the platforms that we're on. You can check me out on LinkedIn. You can see where we are on Facebook. We've been doing this for a long time. We've only recently gone digital, and we're sharing it with you as a blueprint so that you can see what we get wrong and what we get right, in the hope that it helps you too. There is so much hidden and unlocked value in companies that we want to unlock, especially for those of you that are thinking about selling, so that you can keep more of it in your bank account and your pocket than elsewhere. So thank you for watching. Please like and subscribe. Please hit the notification bell and give us any comments on what you think of this video. And if you want us to talk about any other aspects of business, just let us know and we'll do our best to cover it. Have a great day, everybody.